morning and welcome to Charting the Markets on Friday, the 24th of November. Equity markets in Asia were mixed today as we got inflation data out of Japan, and we saw that the month-on-month rise in inflation in October by 0.7% was the highest in a decade, and the year-on-year inflation rate in Japan rose to 3.3%. Now, obviously, this will concern the Bank of Japan, which was hoping to normalize its rates policy, its monetary policy basically next year. But it will very much keep a close eye on whether inflation is picking up again in Japan in the coming month. And when you look at the UK, we had Nissan earlier this morning pledging a £2 billion investment in its electric vehicle plant in Sunderland. And we also had Legal & General agreeing to a £4.8 billion full buy-in for the Boots pension scheme, the UK's largest single buy-in by premium size, which secures the benefits of all 53,000 retirees. Now, none of that, nor the UK consumer confidence data out earlier this morning, which came in better than expected, helped the FTSE 100 to rise. If you look at the daily financial bet of the FTSE 100, we can see that we continue to trade above Tuesday's 7,446 low in a very tight sideways trading range with little volume and little volatility, as of course the United States are celebrating their Thanksgiving prolonged weekend. Now, the US markets will be open for half a day today, but even so, a lot of people are sort of more focused on Black Friday deals than they are on the financial markets. So not much is really happening here. I don't expect volatility to pick up by the end of this week. The key areas to look out for next week are basically the orange line here, the 55-day simple moving average at 7,505, because a rise above there would put us back on track to reach the current November high at 7,535. And then above there, we've got the 200-day simple moving average as a potential upside target, 7,589. And on the downside, if we were to fall through Tuesday's low at 7,446, we could then fall back again towards the 16th of November low at 7,403, and that's just above these key support area levels here between the early September and October lows between 7,384 and 69. But really not much going on here. We are within a gradual upward trending channel in the FTSE 100, but not much is happening, and the FTSE 100 is still trading at around 1% losses year to date. And when you compare that to the German market, even though Germany was in a recession and is likely to head into a second recession later this year, as we saw this morning, Germany's economy contracting by 0.1% when we looked at a revision of the data. That was for the third quarter of this year, compared to a previous announcement of growth of 0.1%. And basically what we saw here is basically the DAX 40 continuing to rise, and it's up nearly 14% year to date. And you can see here that we are now flirting with the late August to September highs between 15,992 and 16,044 on this daily financial bet. But yes, I mean, the DAX 40 still looks bullish. Yes, volatility has decreased. You can see here these candles are becoming ever smaller. Little volume is going through. And yes, we remain in an overbought area with regards to the relative strength index. But since there's not much going on because of the Thanksgiving weekend in the US, I don't think that much will happen here either. We're just flirting with a psychological 16,000 mark. And basically, from a technical perspective, as long as we stay above the accelerated uptrend line, which goes back to the end of October, around 15,766. And more importantly, the red line here, the 200-day simple moving average at 15,673, the uptrend remains intact. And what it basically means is that when, not if, I believe when, we will finally take out the late August high at 16,044, we could then attack the July high at 16,532 into year end. And if you look at the Nasdaq 100, we can see here something very similar happening. The Nasdaq accelerating quite drastically. I think it's risen by about, let me just double check this, yes, over 12% since the end of October. and has this week reached briefly intraday a near 2-year high, and it traded at levels last seen back in January of 2022, before then consolidating around this Thanksgiving prolonged weekend that we're seeing at the moment. And today the Nasdaq will be open for half a day session, but many people will rather look at Black Friday deals than to trade. So not much volume going through probably, and not much volatility expected to be seen either. Now, with regards to the technical picture, provided we stay above the last reaction low, that's to say the low from mid-November at 15,735, this current steep uptrend is very much likely to continue. Yes, after Thanksgiving, we could see some short-term consolidation as yields in the US, and not just in the US, but globally, are beginning to pick up again. And potentially that could put some pressure on the advance that we're seeing in the Nasdaq 100, which incidentally has risen by over 45% year to date. So a very strong ascent seen here with regards to the Nasdaq 100. And we could, in the coming weeks into year end, actually head back up again towards the late December 2021 high at 16,666. So that would be the next upside target. But so far, we are on track for our fourth weekly consecutive gain, as is the DAX 40. The US dollar is starting to fight back with regards to other currency pairs as US yields are starting to rise again. But if you look at the euro dollar, all that has done so far is that we are now trading in a very low volatility sideways trading range below this week's high at 109.65, a high which was last traded back in August of this year. But we can see clearly that we formed a bottoming formation, that this has now been confirmed, and that we are still heading higher. And if we were to take out next week, for example, 109.65, this week's high on this daily financial bid, we should then be heading back up again towards the late June high at 110.12. So that would be our next upside target ahead of the 10th of August high at 110.65. So the uptrend very much in place now. And we also have pretty good support here between the November uptrend line currently coming in at 108.36, and the red line here, the 200-day simply moving average at 108.12. So basically, as long as that sort of area holds, further upside is expected to be seen with regards to euro dollar, even if short term we might see some sideways trading as the US dollar is basically gaining some ground. But if we look at the British pound, we can see the same story here. The British pound has actually risen today against the US dollar, as the consumer sentiment data out of the UK came in better than expected and better than in the month of October, now in November. And we can see here that we are on track to basically retest yesterday's high at 125.70, a rise above which should take us to the mid-August low at 126.17. So that's the next upside target, together with the late June low at 125.91. And then above 126.17, we've got the May high of this year at 126.79, which is another potential upside target. But we can clearly see that the downtrend that we've seen since July of this year to October has now ended. We formed a bottoming formation, and we are now in a gradual uptrend, which should take us higher over the coming weeks and days. And provided we basically, from a short-term perspective, stay above Wednesday's low at 124.50, and also the uptrend line here, the red line, the 200-day simply moving average, around similar levels, we should basically continue to advance cautiously in the days and weeks ahead. Now, dollar yen has also bounced off its low seen on Tuesday at 147.16, as the inflation data in Japan came in much stronger than expected earlier this morning, and as basically yields in the US are starting to pick up again and propping the US dollar up. And you can see here again, not much trading going on, as little volatility is growing through the currency markets as well because of this prolonged Thanksgiving weekend. But from a technical perspective, what's interesting is that we are now trading back above the 55-day simply moving average at 149 yen and 37 sen. And if we can take out Wednesday's high at 149.75, we should then be heading back up again towards the early October high at 150.16, and above there we also have the late October high at 150.78. So these are the potential upside target zones for dollar yen, and dollar yen looks to have basically resumed its long-term uptrend with regards to the currency pair. The price of Brent crude oil, having risen by 6% earlier in the week, then dropped by about 5% just a couple of days ago, and that was on the back of news of basically a postponement of the OPEC Plus meeting, which was supposed to take place on Saturday on the 26th of November, or the weekend basically, has now been postponed to the 30th of November, as apparently it is rumored that OPEC Plus members cannot agree on further supply cuts. And if you look at the price of Brent crude oil, we can see here this leading to a lot of volatility on Wednesday, where we dipped down all the way to the $78.48 low, before then heading back up again towards this October to November downtrend line, which earlier this morning capped the upside with regards to Brent crude oil, and also as the 200-day simply moving average here at $82.10 is also acting as short-term resistance. But we can see here that basically the volatility has been taken out of the Brent crude oil price, with little sideways trading here and low volatility, low range trading being seen along well, for the last few days, basically, as the Thanksgiving weekend has basically led to most investors not really being interested in trading the markets at the moment. Now, next week, what we would need to see for the bulls to be back in control is a rise above Monday's $82.87 high. That could then take us back up again towards the mid-November high at $83.79, and perhaps back towards the 55-day simply moving average here in orange at $87.36. But that would all have to happen for a reversal to be seen, unless we take out the $83.79 high from mid-November. We could just continue to trade sideways and basically have minor support coming in around the psychological $80 mark. The gold price is also interesting in that it has been rising again from its mid-November low at $1,932 per troy ounce, and nearly reached its October peak at $2,009 per troy ounce earlier this week, having risen to $2,007 before just trading sideways again in very little volume and very little volatility. As once again, I'm saying this, repeating this really, the Thanksgiving weekend is meaning that a lot of investors in the US are simply not present in the financial markets, and therefore little volume being traded here. But technically speaking, provided we stay above the last reaction low, that's to say Monday's low at $1,966 per troy ounce, the uptrend remains intact, and a rise and daily chart close above the October high at $2,009 per troy ounce would then take us to the next higher trading range, and that could then take us back up again towards the August 2020, March 2022, and May 2023 highs between $2,070 and $2,082 per troy ounce. So that is something that may well be happening over the coming weeks and months with regards to the gold price. And last but not least, let's have a look at the price of silver, which has also risen in line with the gold price as the US dollar depreciated. And here we can also see that this week, though, we've seen very little trading, just sideways range trading in little volume and volatility above this red line here, the 200-day simply moving average at $23.33, but below the longer-term May to November downtrend line, which comes in close to the mid-November high at $24.14 per troy ounce. So little going on here, but from a technical perspective, provided we stay above Monday's lows at $23.25, further upside looks to be more likely than any downside reversal. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on X. My handle is @AxelR_IG. Have a lovely weekend. Goodbye.